Hello, kids. We're here to cover your assets with JJ Childers. None other than JJ Childers. He looks like he's 12, but man, the guy's been around for years. JJ, thanks for being here.
Hey, Kenner, it's great to be here with you. Thanks for having me.
You like that? You like that? You look like you're 12, but you've been around
I
for a
do
while.
like that. I don't get that as much as I used to. Some of this gray hair and lack of thereof up here.
Oh, whatever, dude. So, real quickly, why don't you tell people what you're most known for, and then we're going to go into your background. Go for it.
Yeah, thanks, Kenner. As JJ Childers, one of the things that I do, I help people to protect their assets, plan their estates, and reduce their taxes. I work primarily with investors, small business owners, entrepreneurs, and helping them to really kind of clear up a lot of the confusion, the cost, and the chaos that comes with trying to figure out everything that goes along with planning your estate and protecting your assets and reducing your taxes. It can get complicated. I try to make it simple, easy to understand, but yet incredibly effective.
I love it, love it. So, why you? Why JJ? Why not go to some attorney down the street, or why not try to do it myself?
Yeah. Now, I'm going to take those one at a time. First of all, when you say why me, first of all, because I've done this for nearly 30 years now. I've worked with literally thousands and thousands of people, helping them to get, grow, and guard millions and millions of dollars. And most importantly, I understand what it is that people are trying to do. As a small business owner and investor myself, I understand a lot of the challenges that people face, which one of the things when I speak at, say, real estate investment seminars, people love the fact that I'm actually involved in real estate. So often they talk with an attorney, an accountant, maybe a financial advisor that doesn't really understand what it is that they're doing. And if they don't understand what they're doing, they don't really understand some of the challenges that people face when they're involved in these types of activities. Because I actually do it, I don't just talk about it. I don't just help people to solve some of their problems, which I certainly do those things, but I also get it because I'm out there in the trenches with them. I know exactly what they're facing, and I know the frustration, because even though I do this, as my profession, I also encounter situations that if I wasn't out there doing it, this isn't stuff you just read in a book. This is stuff that you actually, because you're doing it, you gain greater experience and expertise. So that's why I would say to work with me. Now, why not just go to somebody up the road? For certain things, I would tell you to go to somebody up the road. But when we're talking about protecting your assets and planning your estate and doing things, especially for people that have unique circumstances. I mean, if you're just, and I hate to say just, I don't mean that disparagingly at all, but if you have a salary, you maybe have a couple bank accounts, maybe an investment account, retirement plan, insurance, and that's all you do, that's pretty straightforward. You don't necessarily need sophisticated representation with your wealth protection planning. That's something that is can be done by just about anyone that specializes in this area. But when you start getting into complex type of structures where you have limited liability companies, you have limited partnerships, you have corporations, you have S corporations, you have multiple entities working one with another, that's where you need to work with somebody that understands that. And that's not something that is easy to find. I mean, it's a very, very niched area that only a few people are very well versed in that. And that's what I've devoted my entire career to, making sure that I become an expert in. So that's why I would say come to somebody like me rather than just going to somebody up the road. Then the next one that you said was do it yourself. I don't even know that I can comment on that. When you start talking about doing it yourself, I'm going, to me, it's almost like saying, yeah, I've got a cavity back here. Maybe I'll just kind of reach back there and see if I can just kind of drill on that myself and see how that's going to work out for me. But that's not a prudent move.
Enough said. I totally get it. Saying that kind. What's funny though, I'm kind of laughing about it. I just got off the phone with a client who we just do a specific thing for him. Net worth $10 million. Who he's kind of representative, pretty much, of a lot of our clients as far as net worth goes, and he's doing all his stuff himself. His taxes, kind of some of his investment management, his quote legal stuff, and I'm like, dude, really? And I just found out he had all his real estate, which is all over the country, that's, owned in his own name. So it's ridiculous to do that because, man, if he gets, no, I should ask this as a question. My bad. Let's say he gets sued. He has a property in Rhode Island under his own name. Let's say, and sometimes he rents it out, which I didn't know before. So let's just say, as an example, his tenant, or it's a short-term rental, slips and falls. What then happens to all his assets?
Well, that's the biggest, and I'm going to kind of take it a little further back than what most people would,
Uh,
because most people would give you the straight answer and say, okay, well, then they're going to file that lawsuit. They're going to come after that particular asset. But the reality is they're going to do a title search. They're going to find the owner of the property, which there's no sort of privacy whatsoever if it's owned in a personal name, because that doesn't give you any protection. I mean, sometimes I tell people that what we're doing is really setting up kind of a security system around your assets. And people get that, and it kind of resonates with them when they hear security system, because they think about their personal residence and they think, okay, I've got doors and windows. All of those doors, most of those windows open. On those, we've got to have locks. Well, some of those are major entry and exit points. We got to have deadbolt locks. Some of those may have glass next to them, so we need to have double-sided deadbolts. And then we want to make sure we don't just leave the key in the backside of that double-sided deadbolt. We've got to have additional protection in place. And then we want to have maybe the glass break sensors. We want to have motion sensors. We want to have the alarm. We want to have all sorts of things. Sometimes I have, clients, maybe my Smith or my NRA clients or Texas clients, they'll say, son, I got a partnership with Smith and Wesson. So you got layer upon layer upon layer. If it's all in your personal name, you have 0 layers.
Right.
One of the layers that I always talk about beginning with is, how about having the sign out in your yard that says these premises guarded by ADT alarm system or whatever it may be. That's enough to keep some of the people out. I mention all of that to say, even just having it in a name of an entity, that gives you a little bit of protection, because now they don't necessarily tie it back to you. Now, that doesn't mean they can't, because like I said, going further back, they're going to do an asset search. They say, who owns this property? And then let's say that it's just in an LLC. Sometimes an LLC can be great, but then they say, okay, that LLC, and you mentioned, I think, Rhode Island is what you said. So Rhode Island, what if that entity was set up in another state? Because they may first say, okay, I see this LLC. Let me search the Rhode Island Secretary of State's database, see who might be the owner of this. That may not be registered because it wasn't registered in Rhode Island. It still has to be registered to do business there, but that could have been done by somebody else that the owner's name is not even attached to that. And it could have been set up in another state. Well, now they've got to try to figure out which state. And things have gotten a lot easier to track that down and to find that. But what if it's owned in an entity that's then in the name of a trust? See, now we've got additional layers of protection. And this is an example, what you asked me earlier, as far as why would you work with me versus somebody else, is because it's multiple layers. Just like in my personal home security system where I've got multiple layers, I've got those multiple layers through the use of legal entities and additional structures like trust and other things to make sure that we have the most rock solid, ironclad plan available. And it also enables us to shift income amongst these legal entities so that now, even if they sue a certain entity and they win, if it has no assets, there's nothing to get. So, but to further the point that you mentioned as far as what would happen, let's say they did find out who owns it. Even if that was a smaller property amongst the more vast real estate total portfolio, if they get a judgment and it exceeds the amount of that particular asset, they can go after all of the other assets.
Right.
And that's where we start saying, we've all heard this. I teach a strategy called isolation and insulation. And that isolation and insulation is where I say you need to isolate assets and activities into separate legal entities to insulate those assets and activities from the liability of your other assets and activities. Now, I know that was a mouthful, so I'll say it again. Isolate your assets and activities into separate legal entities so that you can insulate those assets and activities from the potential liability of your other assets and activities. Now, again, Ken, I know it's a mouthful, and a lot of times people are like, what the heck did he just say? Isolation and insulation. Well, you've probably heard that. Everybody that's watching this right now has probably heard it in a different way. It's called, don't put all your eggs in one what?
Basket. Yep.
See, so that's what we're talking about. People understand that. They hear it and they say, oh, yeah, I understand that. I get it. But then they don't actually do it. So often people know what they should do. They just don't do it. I like to think there's no such thing as a stupid question, but there are some that are what I call borderline. And I always ask this at my events when I'm speaking to groups. I say, when is the time to have a plan? Before it's too late or after it's too late? And people will kind of laugh. And sometimes people will say, hey, you just blew right through the border. That's a stupid question. Because we all know the answer is we need a plan before it's too late rather than after it's too late. But then I always say, okay, but here's my follow-up question. When do most people get burglar alarms installed? After
Right.
they've been burglarized.
After something happened. Yeah, yeah, yeah.
Yeah, see, so that's what happens so often. We've got to be proactive about this. It's not just proactive about the asset protection, but also proactive when it comes to your estate planning, obviously, because you got to have it in place before you die. But then with regard to your taxes, most people don't get the fact that you need to have your plan in place before you ever make the money, because there's different types of income, and those different types of income are taxed differently. So you need to be thinking about how you want to receive your income before you ever receive it. That's one of the things that we've got to be doing. And that's when we work with clients, we make sure that we take that proactive approach rather than being reactive, which is what most people do.
I love that. Yeah, we call it the three P's. We call it prepare, produce, and protect. And really, right now, what we're talking about is protecting. When we're talking about putting a moat around one's assets. In this example, he didn't have a moat around his assets. And what I would say is, for whatever reason, I mean, maybe he was cheap because he is kind of cheap. Maybe he's also kind of lazy. Dude's not lazy, but for whatever reason, it makes so much sense to put it in an LLC in that circumstance. Then the question I'll ask you, I was just asked this. Well, when should I put a property or my properties in different LLCs? As an example, let's just say, I'm making this up. Let's say someone has 5 properties, each worth $100,000, and they have $50,000 per of equity. What are your thoughts on that? When should they be putting properties into LLCs in that example?
Okay, so
Or separate LLCs, or whatever the case is.
and here's a great question that you posed, and because it kind of it helps me to illustrate that not everyone is the same. And that's
Yep.
one of the biggest challenges that you're going to have is with, you go to one of these online companies, they're just going to treat you like everybody else. They're not going to look at your unique circumstances in your individual situation. I always take a look at it. And Kendra, it's hard to answer that question without knowing the totality of
I'm
the
just
circumstances.
being in general.
Yeah, and here's where, because see, I've heard people say, we need to have a separate, LLC for every $150,000. Well, I'm just going to use that because that's one that I hear a lot. And let's say, and I'm going to make a statement that's going to sound crazy, because some of the people watching this or listening right now are going to say, wait a second, say that again. That's crazy. Here it is. The lower your overall net worth, the more entities you may need. And I'm going to say it again. The lower your overall net worth, the more entities you may need. See, that flies in the face of conventional wisdom because most people think, well, I'm not worth that much, so I don't need these legal entities. Or maybe I'll just have one. So, yeah, but now you put all your eggs in one basket. Now, here's where I say the lower your net worth, the more entities you may need. Let's say, in your example, I think you said that we've got, 5 properties worth
5, yeah, I just threw it out.
each,
Yeah.
$50,000. So that's a total, and $50,000 of equity in each. So we said that's $250,000 of total equity. All right. Well, let's say I'm worth, $10 million. You made that reference earlier, $10 million client. If I'm worth $10 million and I put them all in one entity, somebody sues me on one of them, they could take all of them. Well, if they take all of them, then we stand to lose $250,000 as long as it's in that entity. If it's in our personal name, we could stand to lose a lot more than that. But at least with a limited liability company, the whole concept is our liability is limited to that company. Well, I tell people, let's think about this. Your liability is limited to the entire company. That means you've put it all at risk. Well, that's kind of crazy. But back to that $10 million, if I lost $250,000, I'm not going to be happy, but I'm also not going to have to cancel cable next month to make ends meet. I'm going to be okay. But let's say that my total net worth is $400,000 and I only had one entity for those 5 properties and I ended up losing $250,000 of my total net worth of $400,000. It's a big hit. So that's what I mean when I say the lower your overall net worth, the more entities you may need. In that instance, I would probably look at it and say, okay, if my total net worth is $400,000, I don't want to put any more than $100,000 max at risk. So right there, I'd say, okay, I've got to have a different legal entity for each of the 2 properties. That's probably still going to be a little bit more exposure than I want, especially when you look at setting up a legal entity is cheap compared to the risk of loss there. So you may even set up a separate one for all of them. But here's what I like to do. Even if I had just one entity that had all of the properties in that one entity, what if I set it up? The $50,000 worth of equity, I'm presuming maybe it could have been the down payment, maybe a little bit of the appreciation. What if I set up another entity that was a funding entity? Now,
There you
that
go.
funding entity, I took a step back and I put my money in the funding entity. Now, that funding entity loans money to the LLC that acquires the properties, and then it takes a lien against them. Because number one, we're going to have a lien against
Friendly
the property.
lean. Yep.
Yeah, so we got it for the primary funding, but then the secondary funding, we could take an additional lien. Now, here's what most people don't get. A lot of times banks will do what they call cross collateralization. And by cross collateralization is they say, hey, you know what? We're going to want to put a lien on basically on all your properties to secure this one loan. Well, we may not want to do that, but sometimes if we have to borrow money and we need it badly enough, we're willing to accept that. And they say, hey, we're going to loan you this money, but we want to take a lien, we're going to place a lien on all your properties. Well, think about it. If the bank can do that, could your funding company do the exact same thing?
The answer is yeah.
Absolutely. So then now, if we place that lien and then do cross collateralization, now there's no equity. We know we have equity, but the reality is that is encumbered property with the primary lending, the primary mortgage, and then the secondary mortgage. So now it's fully encumbered. There's nothing to get. Now, that's just an example of like some of the advanced asset protection strategies that we help our clients to implement and utilize to safeguard their assets.
See, right there, the answer to my first question about, well, why not me as an investor try to do it alone? Because there's no way I alone could figure that out, or generally speaking, at least. I guess some people could, but generally speaking, they couldn't, right? Number one. Number two, if you do go with an online vendor who knows what they're doing, which they don't, they would never be able to suggest such a thing. Plus, they wouldn't want to spend the time getting to know you and figuring out what you're talking about, strategies like you're talking about. I mean, it's huge. I really appreciate you taking the time to explain that, because that just shows how you can add value, how someone who's really working in your favor can add value to an investor in this regard. So wait a minute, how does someone get a hold of you? Because I like what you're saying. Hopefully there's some people out there who are watching, hearing this, really probably going to want to get a hold of you. How do they get a hold of you?
Yeah, so again, my name is JJ Childers. That's just JJ, and Childers is Childers. And so you can send me an email to jjchilders@advancedtaxgroup.com. Again, jjchilders@advancedtaxgroup.com. That comes directly to me. And if you're interested in kind of pursuing further protectionary measures and discussing kind of how we may be of value, and I tell people all the time, I'm willing to talk to you, and I'll tell you if I don't think I'm going to be able to help you sometimes, or if you don't need my services, I'll tell you that too. Typically the type of people that are reaching out to me are not people that just say, well, I'm just looking to spend money just for the sake of spending money. We have
Yeah.
actual needs. So we say, okay, let's take a look at it. And I'm going to shoot you straight and say, if this is something you need, here's how I can help you. Here's what's involved. Here's how it works. And the other thing, Kenner, is to just kind of see, do we jive? Do we work well together? Because sometimes I'm not ever going to pressure someone to work with me. Because the way I look at it is I'm going to demonstrate my competence and get them to know, like, and trust me based upon my demonstrated expertise. And if they know, like, and trust me, chances are they're going to want to work with me. And if for some reason they don't like me, which that's fine too, I say, hey, great. Hopefully you gain some value from our discussion, and I wish you the best of luck. But I'm never going to pressure someone, which I think that's another distinction with a lot of these online companies. You're going to talk to somebody that may be in a boiler room that's just kind of taking your call and say, oh, absolutely. And they've got a one size fits all plan. They don't understand all of the intricate details that go into a lot of the true wealth preservation and wealth protection planning. They're just going to say, everything fits into this one plan that we've got. Hey, we have our combo package. If you'd like to buy this, here's what we can do. Mm-hmm. That's not going to give you the type of protection you need. You need to have an ongoing relationship that provides you with not just the asset protection, but also the estate planning and then the taxes. Mm-hmm. I work with our group through Advanced Tax Group. What we do is we do all of it. We'll do your tax returns. We'll do your tax planning. We do your entity setups. We'll do your estate planning and your trust setup. And then we incorporate all of those together to make sure that you're taken care of, rather than saying, okay, trying to figure out this person and then this person and then that other person. And then it's just all disjointed. You need an overall cohesive group that's working with you to take care of all of this.
Hmm. Yeah, obviously you guys do a good job in not only asset protection and estate planning, also taxes. So since we only have like about 10 minutes, so I'm going to ask that we only stick to the asset protection portion, because obviously you're one of the OGs as it relates to asset protection. You like OG, you like that?
I do like that. Thank
Which
you.
actually shows, if wait a minute, it really shows that asset protection isn't that old, because you've been around 30 years. And again, you look a lot younger than you are, but it's kind of, if you really think about it, it's kind of a newer thing as it relates to assets in the whole United States, which is kind of weird. But anyway, I won't go down that. I digress. So let's say someone says, I'm trying to think of a good scenario that would be kind of something that would blow in someone. Okay, so let's say I have a business in tons of different states. And I'm a network marketer, because we have some network marketers, or really we have some people who are media people as well, who do media. What are your thoughts about having, 50 different LLCs as an example? Is that overkill? If I do business in, let's say my headquarters of my business is in Delaware, then what? I know it's a hard question, but I'm going to throw that at you anyway, because you can handle
So
anything.
sometimes what we'll advocate is maybe a holding company strategy, where they've got kind of a holding company based, say, in Delaware or Wyoming or maybe even Nevada or somewhere like that, that they'll set up that holding company that can then have the ownership, and it manages all of the entities that may be throughout the U.S.
Yep.
And to answer the question, should I have 50? Maybe even have more. It just all depends. Is it necessary? And that's what I always look at. It's kind of like, you don't have it just for the sake of having it, which sometimes people do. And then there's another thing, Kenner, that I tell people. I say, don't go into it, grow into it. Sometimes I'll work with people and they say, okay, my ultimate plan is I want to have 100 properties, so I guess I'll go ahead and set up 100 different entities. And I say, you very well may need 100 entities at some point. I don't think you're going to need to set them up right now. Don't go into it, grow into it as you start getting those. And the other thing is, as we talked about with regard to the equity or how much exposure you have, I always like to look at it and say, okay, do we have exposure here with this particular one, or do we have enough encumbrances through the mortgages, through the liens, through the things that we talked about earlier, that you don't need to have a separate entity for that?
Mm-hmm.
So we want to make sure that we have an overall plan that addresses each of the things, because what I tell people all the time, it's not what you need, it's why you need it. And that's where I think a lot of people mess up, is they say, okay, what you need is this. And the client is going, okay, why? And people say, well, because I said you need that, or because you need to protect your assets. Okay, well, show them why this level of protection is needed. Because if somebody can't explain to you why you need what they're advocating, then that's kind of difficult for you to make that decision, to really make that determination. Yes, I'd like to move forward with working with you as a professional. And I think that's another thing that kind of separates us from a lot of the groups out there.
I like it. Obviously, you're growing like wildfire based on what I've heard. So you guys are doing something right. So okay, let's say I'm a real estate investor. Again, I like throwing curveballs at you. I just set up LLC, or no, all my structure. Let's say I set up my structure 3 years ago. My attorney isn't that great. How often should you or someone else review my structure or an LLC or whatever the case is?
Well, at an absolute minimum, Kenner, I suggest you set aside maybe at least one day a year. I mean, just to me, it's almost like, we all go through physical examinations. I think you need to go through a fiscal examination. Set aside that time every year that you say, you know what, I'm going to review this with my professional team and say, okay, where am I? What's changed? Now, you may need to look at it more often than that if you were doing new things. Like you mentioned, being a real estate investor. You say, how often should I do this? Well, did you just buy a bunch of new properties? Did you get rid of some properties? Because a lot of the folks that I work with, they may be in and out, in and out, in and out, because they're just saying, hey, I'm more of a transactional volume type of investor. It's almost more of a transactioneering, if you will, rather than being more of a long-term investor. So long-term investor, some of those things are steady, but what changes and what we've got to take a look at is the great thing that I love about real estate is if we're talking about protecting our equity, you've got two things that are working with you. Number one, as you pay down the principal, your equity increases, that gap between the value and what you owe. So that's one way that it's going. But the other thing we have with real estate that we don't necessarily have with all asset classes is the appreciation. So now you've got those two things working together where you've got the principal reduction and the appreciation. So it could happen that all of a sudden you've just got a windfall, not profit necessarily, but windfall, an increase in your equity because something happened. What if all of a sudden a new road is going through next to property that you own that you said, okay, well, I didn't think this was worth a whole lot, but I was hoping someday it would be. And now they decide to put in, a new road that's going to bring all sorts of commerce that changes the zoning, that now property that was residential has turned into commercial and it's worth 10x what you paid for it. Well, that's where we've got to address that as well. And that's the type of thing we would address in that annual fiscal examination, but it's also something that we need to be mindful of. And that's what we try to train our clients on, is making sure that they know, hey, when in doubt, call us. If you're having concerns about, well, I don't know if I don't want to call the attorney, call the accountant, call the advisors. No, call us. And we're not going to just send you a bill every time you call us. If we think that it's something that we need to address, let's have that conversation and figure out what needs to be done.
So, wow. And wow, I like the way every year, you got to do it every year, because my thought is, well, things are going to change pretty much every year anyway. And if they're not, something's a little weird. Most of our clients, I like to think they're growing, even in retirement, because they have, stuff going on. So I would think at a minimum once a year, if not twice a year. What's a typical arrangement, or I should say engagement, look like with you up front and then throughout the course of the quote engagement?
Yeah, so a lot of times it all starts with that initial consultation. It's just kind of saying it's somewhat of an exploratory call or exploratory meeting where we just say, okay, let's take a look at where you are, what are you trying to accomplish, and is that something that what are your most I kind of break things down as like, what are the items for immediate concern, what are the items for future consideration, and then what are the things for ongoing just maintenance. So when we break those things down, then we know, it's the whole thing of, do you have acute pain or is it chronic pain? Things that are more acute are going to require just more immediate attention. If it's chronic, it's like, okay, let's manage this. So it all depends, and it's client specific. So, the hard part about what we do is that it would be great to just have a cookie cutter that would work. That would be great, but we wouldn't be great. And I look at it and I say, we want to have a great company. And the only way we can do that is to be great and not just offering a one size fits all plan.
How many people, by the way, I should know this, how many people work at your firm?
Well, as far as our overall organization, I think we have about 30 employees now.
Holy, are you serious? I didn't know that. Holy mackerel.
We've got the tax team, and then we've got the trust and estate planning team. We've got the asset protection team. And then we end up having to have people to help manage the whole thing. So we've got a lot of different people that are part of the organization.
Holy mackerel, I didn't know that. And so, again, because we're limited on time, sadly, maybe I'm gonna do an ask here, because we're talking so much about asset protection. Obviously, you guys do estate planning and then also taxes. I see you come back another time and talk about estate planning and taxes, if that's okay.
Yeah, absolutely. I'd love to talk. I mean, any way we can help people. I know that sounds kind of self-serving, but I'm like, truly, where I get my most enjoyment and satisfaction is by seeing the enjoyment and satisfaction of our clients when they implement our plans and they tell us, hey, thanks so much. This is something I've been putting off because they were confused. And a lot of what we do is educational related, where we say, you know what? We don't want clients to feel like, okay, you know what? I don't have to know anything. I'll just defer and turn it up. Because I say, yes, you need to delegate, but don't abdicate. And that's what people are often guilty of, is that sure, delegation is smart. Abdication is dangerous. If all you're doing is saying, let me just turn things over. Because when it comes to taxes, when it comes to other things like that, I can't determine if an expense is deductible if I don't know what your intent was. That's where you've got to be part of the process to know, hey, this is an expense that I incurred on behalf of my business. This is why I think it's deductible. And we say, okay, that makes sense. But the item itself does not determine the deductibility. So that's something we're going to want to talk about on a future session.
I understand. That'd be great. Okay. So let's stick to asset protection. So what's one example of a situation where you've totally straightened out, totally helped a client, and you felt like unbelievable about. Like maybe they're totally unorganized, or maybe they own whatever, pretending $100 million in real estate and they own it all in their name. I don't know. I'm looking for a gross example so people can tie it into them if possible.
Yeah. So what I love is when people will contact me and they'll say, I mean, a lot of times it'll be like, you know what, my wife has been getting onto me for this, and it's something I need to do. We realize this because they're just nervous wrecks. And
Mm-hmm.
sometimes they may be overreacting. We'll say, no, hold on. Let's just kind of guide you through this process. And it's the people that, when I see that transformation, not just in their finances and in the organization, but that transformation of their lives in general. Now, all of a sudden, they have so much more peace that now they know it's taken care of, because it was kind of like herding cats before we got involved. And I kind of say, how did you, I mean, you work with some people, and you know this, Kenner, you work with some people that are extraordinarily successful, and you think, oh my gosh, how are you so successful when you don't have any sort of organization in place? Now, to
Mm-hmm.
them, they think, hey, this is organized chaos. We're saying, well, let us bring some organization here. So I've worked
Mm-hmm.
with clients in that type of circumstances where, especially when I'm able to take things that, I mean, it was just, they had no, because I'll ask them questions and they have no idea. And I said, well, let's take a look through the documents. Let's take a look at everything that you've got. And sometimes they don't even know where the documents are. So we have to help them find those. And then once we do it, we're able to kind of put that, not just straighten out the pieces of paper. That's great. But the reality is, okay, now where does this go? What does it do? And we help them to gain a better understanding of what they have, which wasn't necessarily a part of our job, but that's part of what we incorporate, because for us to truly be effective, we've got to have a good understanding. And that starts with making sure that they have a good understanding. So I always look at it and I say, I want people, when they're done with working with me, rather than saying, wow, he sure does know his stuff, I want them to say to themselves, wow, after having worked with him, I sure now understand this stuff.
Yeah, nice. That's a good quote. I like that.
Thank you.
That's a really good quote, man. You're built for TV and radio. Wow. So I'm gonna kind of partially land this plane. I'm gonna give you kind of a nice segue maybe to our next session, if you're going to be able to be so nice and be doing the next session. Listen to this. So someone came after me, one of my tenants in one of my properties. He came after me with a big time attorney, and it was frivolous. It was kind of I would say a dumb lawsuit, right? Because let's just call it a slip and fall. It wasn't slip and fall, but I'll be very simple and say it was slip and fall. The attorney came after me. He shouldn't have found out. It was, I was the owner. Long story as to why he found out. It's a big time attorney, and this guy scared me. Like, he was big time attorney. When he found out at the end of the day that I only had a very little amount in that LLC and it was properly structured, he didn't come after me anymore. And he would have, he really wanted to come after me. Long story as to why. But I think a properly structured LLC, properly structured structure after that, makes all the difference in the world, because it shies people away from actually going after one because they're properly structured. That attorney was like, dude, I'm never going to get any money. It's just not worth my trouble. That's what I consider such an important element to a properly structured asset protection process and system in place, because, man, it can save you a lot of money before anything occurs in the first place.
That's exactly right. I tell people all the time, at our events, I'll say, I'll say, by a show of hands, how many of you ever seen these extreme makeover shows, where they take a person, a property, a project that's, shall we say, less than desirable at the beginning, and then after the group works their magic, gorgeous. And people always, I said, what we do is what I refer to as a reverse extreme makeover, where we take you from where you are right now to where, when we're done with you on paper, you look as dead broke, destitute as possible.
Yeah.
And then every now and then I'll have somebody that's like, hey, I'm already there. You say, okay, well, maybe you got a head start. But the reality is, notice what I said is, on paper, you look dead broke. Doesn't mean you're dead broke, because remember, some of the strategies we've talked about just even in this short period of time we've been together here today is we've talked about ways that you can implement protection, which is going to make you look less desirable. Because if we say, hey, you're fully encumbered, it looks like you're in over your head, you're underwater.
Yeah.
We want to look like we're underwater, because then those attorneys that you talk about say, why would I pursue this? Because at the end of the day, there's no pot of gold at the end of the rainbow.
Right.
So that's
Yep.
what we want to make sure we do.
Own nothing, control everything. So we only have a couple minutes. One last time, how does someone get a hold of you, JJ?
Yeah, just send me an email to jjchilders@advancedtaxgroup.com. Again, JJ Childers, Childers, at advancedtaxgroup.com, and we'd love to work with you.
I love it. And if you can, again, I'm going to ask you to come back so we can close the loop on estate planning and tax, if that's okay. Sound good?
That sounds great.
Sweet. Once again, hey, this is Kenneth French with VastSolutionsGroup.com. We're speaking here at Vast Voice, telling business secrets to entrepreneurs. Totally appreciate you guys spending the time. I know you could be doing a lot of other things. You could be hanging out on the beach. You can be watching Facebook Live, but you spent time with us, and I really do appreciate it. Please come back. Once again, JJ, thank you. And to all the people out there in the world, thank you very much.
Thank you.
All the people out